Entrepreneurship is great, but can also seem overwhelming. Wouldn't you like to know the pros, opportunities, and problems with different business and investment strategies before you jump in? Well then, welcome to Entrepreneurship Exposed. Oh, we are here. We are back with another episode of Entrepreneurship Exposed with your guy Beez. And yes, this is going to be fire.
Yes, sir.
Woo! Listen. This is Entrepreneurship Exposed, where we expose everything related to being an entrepreneur, the strategies that exist that you could try to, go down, the things that you can do. We talk about investments. We do all of this with a twist of business acquisitions. But today, we're focusing on business acquisitions. And I got an amazing guest. He and I have been trying to tap in to do different things for quite some time.
Yes.
But it's finally here that I got him on the podcast too. So give a warm welcome for Shaheed Bailey, aka Young Reginald Lewis. What's good, my brother? How you feeling?
What's going on, man? I'm feeling good. I'm feeling really good, man. Really excited. Finally connecting with my brother Beez, man. This won't be the last time, I promise you, man. We got a lot of things that we're going to be doing together. So truly, truly excited. Really, really excited right now.
That's what's up. And Shaheed doesn't had some technical issues, so we couldn't get on video, but at least y'all are hearing him on audio because we could not let this episode slip.
No,
we had to
that was a non-negotiable, man. That was a non-negotiable. I had to be here with my brother, man. I made sure that I cleared out my day just for this. So
there we go.
I wouldn't have it any other way.
That's what's up. Now, before the people, you tell the people a little bit about yourself. You know who you are, what's your story. We got to start with the first thing.
Sure.
When I first saw this guy online, I was like, yo, is that Reginald Lewis's son? I was like, what's going on? I was like, I thought he only had 2 daughters. What happened? And then, I realized what he was doing. He was using it as that's extra motivation. Most people don't talk about Reginald Lewis. And before I let Shaheed introduce himself, who's Reginald Lewis? Y'all may be asking. Well, if you've watched any episodes of Entrepreneurship Exposed, you probably heard me mention his name. This book right here, Why Should White Guys Have All the Fun? It's the story of Reginald Lewis's life, the first Black billionaire in America. In modern times, first Black billionaire, and most of us don't know his name. That is unfortunate. And how did he become a billionaire? Through LBOs, leveraged buyouts. So we're going to talk about why you chose that name, that moniker, everything. But first, tell the people more about who you are and what's your background.
All right. So outside of the whole Young Reginald Lewis handle, my name is Shaheed Bailey, 35-year-old entrepreneur from New Jersey, turning 36 next month on the 5th. So I'm really excited about that. Proud father of Beez, don't fall out your chair. 6 daughters.
6?
Yeah, 6 daughters. Been married.
Okay.
Been married for 6 years to my beautiful wife, who is a huge inspiration as to where I am today and why I'm still going. I'll get into that story a little bit later as well. Yeah. But 6 beautiful daughters. Born and raised in originally in Orange, New Jersey, still in New Jersey right now, and decided that finance was kind of the way that I was going to kind of shape my life and my family's life, right? So I'll dive a little bit deeper into my story as well as to how I even ended up here today. But it all started in in a long journey from Wall Street to meeting with this great guy named Clifford Reed, how he changed my life, and kind of like how I started moving into the direction that I'm in today.
That's what's up, man. Now, but so did you always know that you wanted to get into mergers and acquisitions, or
no? So it wasn't. Yeah, so it wasn't. So I never knew that I really wanted to be in the mergers and acquisition space. I always knew I wanted to be in the finance space. Actually, I wanted to be a banker, right? So that was my goal. And funny enough, I had my first daughter when I was, really, really young. And tried to go to college. I finished a semester at Berkeley. And then, it was one of those situations like you got to provide for your family, right? grew up primarily. I grew up in a single family home. My father passed away at 36 from colon cancer. So I really didn't get a chance to see, what a man was like in the house, right? Or, to the steps to success. I didn't see it. My mother tried as best as she could. Everybody in my family was financially illiterate. So there was no talks about bank accounts, savings accounts, and CDs or any of those conversations never happened in my house. It was always just survival, and whatever you had to do to survive. And I had a different mindset. I just knew that I wanted better. So I was looking into different books, and, I was saying, I'm going to be, the next Donald Trump. And all of my friends are laughing at me like, man, you're not going to be no Donald Trump. Let's go talk about rapping, the basketball, the football, or boxing, because I was into boxing too. And just knew that wasn't the path for me, right? So went into Wall Street at 19, walked up and down Wall Street with my resume, got into a firm, but the firm told me that I had to shave my beard and my mustache. So I had to have the clean face. And I from a young age, I said, I will never compromise, So I kindly turned them down, feeling depressed. Mind you, I had a really baggy suit. Wasn't tailored, anything. And I'm walking down Wall Street, and I get to the end of Wall Street, 110 Wall. And that's on the left side, right by the water. On the right side at the time, it was a Citibank. So out comes this. So I'll go upstairs and I hand off my resume to this company called Reed and Rudiger. Now, the whole time I'm thinking, two white guys that own the firm, nothing wrong with that, but I'm thinking it's two white guys that own the firm. No way they're going to call me back. So I'm downstairs. Luckily, I didn't leave yet. Out comes this big, bald, black dude with this nice suit on. I'm like, who the heck is that? So we ended up locking eyes and talking, and he didn't tell me who he was at the time, and I just kind of told him my story. I said, hey, I really wanted to be on Wall Street. I just dropped off my resume upstairs at Reed and Rudiger. He did something that nobody ever did for me at that time anyway. So as I'm telling him my story, he just stops me. He says, wait. He goes across the street. Again, that was a Citibank at the time. He comes out of Citibank with $600 in cash, and he hands me the cash. And he told me, he said, let this be the last time anybody ever gives you anything. He hired me. He paid for my schooling for me to get, it was right on Trinity, to get my Series 7. Long story short, that first year, that was Clifford Reed, by the way. I'm still good friends with him.
Oh, that's the Clifford Reed.
That's Clifford Reed right there. So that's Clifford Reed right there. And that first year on Wall Street, I made $80,000, the most money I've ever made in my life at the time. And then, I started getting good at it. And then 2008 hit, kind of like the recession hit. And, before that even happened, he told me, he said, look, this is about to happen. You're very smart. Take what I taught you and kind of go into traditional banking. Went into traditional banking. Realized that was a glorified sales job. Didn't really like it as much as I thought I would. But I met some really amazing people along the way. Fast forward to 2011. I think I was having either my second or third child at the time. Got in a bad car accident coming from, if anybody isn't familiar with New Jersey, I was coming from a strip club out in Passaic, New Jersey for one of my good friends' birthdays. I had just bought a 525 BMW, so I was really excited. Didn't want anybody to drive it. Well, I don't even know if I was big on like Uber or Lyft at the time, if he was even out. But that was in 2011. And this is what kind of changed everything for me. I had a bad car accident. And my job literally fired me. The bank fired me because I couldn't make it to work. I didn't have any transportation. And I put it in my mind. That was the last time that anybody will ever have the opportunity to fire me.
There we go. So that's powerful. That's powerful, man. Because you people often suffer through life. Suffer through things that's happening to them in life and figure, well, there's nothing I can do about it. Right. And that's a terrible mindset to have, because there's always something that we could do. We can get out of the situation. It may not be comfortable initially, but in the long run, we will be more at peace. Right. So I'm happy hearing you saying this, how you did it and made that decision. So keep going. Tell me what happened next now.
Yeah. So what happened next was I grew up on a street called McChesney Street in Orange, New Jersey. So I named my first company McChesney Street Lending Capital. So McChesney Street Lending Capital was an alternative lending company, and I learned about the alternative lending industry from a gentleman named Jeremy Ziegler, who again I'm still friends with today. His office is on Park Avenue in New York. And he was telling me about alternative financing, and I'm like, "What's alternative financing? What is that?" So he was like, "Yeah, you can give these short-term loans to people and things like that." So merchant cash advances at the time. So I started my first merchant cash advance company. Failed horribly, Beez. All right, failed horribly. Went through a few name changes from Michigan Street Lending Capital. I learned a lot from that. Went into another company called InvestoShare. From InvestoShare, we got a little bit more experience. I was able to hire a few people, and then started really getting the hang of the merchant cash advance space. So I was doing lending for up until probably like 2017, by myself with a few others. And then I opened up a company called Greenpoint Capital. But in 2018 is where it really started into the whole mergers and acquisitions. So I met a gentleman by the name of Carl Dorval, who owned a publicly traded company called GEX Management, who is still in existence today, out in Texas. And he initially came to me for some financing for his company. And he was telling me that he's looking to do an acquisition. So I'm like, you know what? I help with the acquisition. I have no problem. So it was a healthcare staffing company that was based out in California. Actually, the person that owned the healthcare staffing company, her son is one of the owners of Triller. Bobby. Yeah. So I spoke with him a lot. I'll get into the Triller story too.
Yeah.
But spoke with Bobby and his mother. They decided to sell, and Carl was so impressed with me. He said, "Listen, I need you to come on as my chief investment officer, man. Help us with the acquisition." That one acquisition took us from $3 million to $30 million in revenue. Just that one acquisition, with positive EBITDA. So we were really excited. Then we started doing a few more acquisitions. If you go on GEX right now, the stock ticker is GXXM. You'll see that I'm on the board there. And I moved into a more board role after that. Hired another CEO named Sri Vanamali, who again is a good friend of mine. But that's what got us into mergers and acquisitions. And then I found another company that was sort of like almost like similar to an Uber Eats, but out in Texas, called Crave 24. Had invested in that, and that's what kind of got me going, right? So then I started doing a few more acquisitions and started investing in a lot of companies, like now a restaurant. I'll get into my portfolio, but I want to stay on track on the story of how I even got to where I am today. So then SPACs came out, right? If anybody that doesn't know what a SPAC is, that's pretty much like a special purpose acquisition company or blank check company. A lot of companies were starting to do these SPACs, but I wanted to do a different kind of SPAC, right? So the SPAC I wanted to do was primarily focused on minority companies and a minority founder, because I did the research and I saw that there's not a ton of us, one, as billionaires, and two, that run Fortune 500 companies. And not only that, but publicly traded companies, there's not a ton of black CEOs. Yeah. So I said to myself, you know what, there has to be a company out there that's worthy enough to go public via a reverse merger or SPAC. Went out, we were able to raise 2.1 million. We were looking to do $4.6 million. We were able to successfully raise $2.1 million, but couldn't kind of bridge that gap. And one of my mentors told me, he said, "Shaheed, the best way to do this and to kind of prove it out is to go out and have these sponsors, right? Put some of your own money in there, but also go and raise some money from people that, have a little bit more experience than you," right? We were able to connect with one of the largest Black-owned investment banks, who we told our story to, and they kind of validated what we were looking to do, because they said there aren't any. Luckily for us, it didn't fall through the way we wanted it to fall through, because of if you look at what's going on with SPACs right now, all of the people that went that merged via SPACs, their stock is down tremendously, right? Yeah. So kind of good that we didn't do that. So I said to myself, you know what? I'm just going to continue doing what I'm doing. I'm just going to go buy more companies. So I bought another publicly traded company. And so during the pandemic, I was helping some people with some more financing, still managing my small portfolio that I had. And then, during the pandemic, I said, I'm really gonna just go full throttle into just buying more companies. So I just went, just going crazy. I had bought like just in 2021 alone, I bought like 7 companies. I just started buying up everything from call center to energy company, another publicly traded company. So I just started just buying. The publicly traded company?
Yeah. What is the process looking like for going for a publicly traded company?
Got it. So publicly traded companies, obviously the thing you want to do there is you want to buy or have controlling interest or the controlling shares, right? Mm-hmm. So I primarily focus on companies that trade over the counter, whether it's a pink or a QM or QB company, right? Mm-hmm. Look for companies that's fully reporting. Now, when I say fully reporting, that means that they produce transparency in terms of their financials from their Ks and their Qs and their quarterly reports and their 8Ks and any type of public information, right? So I go after those companies and I find CEOs or owners of those companies that are either burned out or they can't find the way to grow. So what I'll do is I'll come in with my strategy. And in this particular case, I kind of knew the owner of this company right here, and I told him my strategy. And he said, "Shaheed, you are the guy to push this company forward." So we bought his controlling interest into his shares. I think it was a little over $7 million that we purchased it for. Mm-hmm. So it came with, I had to restructure the board, which is not easy, and having controlling interest allows me to do what I need to do, right? So even with my current strategy right now, I always look to go and acquire controlling interest in the company. So acquiring those controlling interest shares allows me to restructure the board the way I want to. It also allows that nobody can, the way that the shares convert, no matter how many shareholders, can vote me out. Right, so nobody. That's very critical. So
that's funny you said that was going to be my next question because I've seen it happen too many times.
Correct. So then I create a different class of shares, and only a few people have those shares, and I control majority of those shares, like preferred stock. So I have all of the preferred shares, and the way that my preferred shares convert to common is like 10,000 to 1, right? So there's no way possible that anybody can vote me out of my position. So, and that allows me to kind of push forth my my strategy. And then after I do that, right, after I, my strategy kind of works, then I can kind of convert those shares, those preferred, into common, and then I can offer those to the shareholders. It's almost like a distribution almost, right? So that's kind of what I want to do. And I put together the board that I like, people that I trust, that kind of understand the vision that I want.
So, and that's mainly what you're looking for when you're putting together the board. The board is
what I'm looking for.
Plus within the realm of your vision.
That's correct. And I want somebody that has a ton of experience as well. So it kind of lends to that credibility of what we're trying to do. Right. Because my goal is now, normally what you want to do is you want to go from an OTC company to a NASDAQ company. But you don't just automatically just jump to NASDAQ. You go to what's called NASDAQ CM. And in the NASDAQ CM market, what they do is those are companies that's looking to just raise capital. So, Sprint was there. Muscle Maker Grill is currently there. A lot of these companies are on the NASDAQ CM. And then you go to the regular NASDAQ. So that's kind of like the transition of what we're doing. So we're building that out right now. Very expensive to run a publicly traded company. You got to spend, $30,000 a quarter just on your audits. And anytime you want to produce anything like a K or something like that, or it makes you become transparent with everything that you do, because everything you do, you have to put out a public notice, like it was called the 8K. So that's the way we went, right? So acquired the publicly traded company, and then started kind of building that out, which I'm still doing right now. And we're almost where I want it to be. I say Q2 of this year will be exactly where we want to be. And then we can start on that road to, I call it the road to NASDAQ. So that's where we are.
So let's jump ahead and then come back, right?
No problem.
So jumping ahead, where have you reached right now with your total portfolio?
So my total portfolio right now, we're close to 30 million in revenue across all my companies, right? And we're on our way to 100 million. And I'll show you how. I'm going to tell you how we get to 100 million, right? So I just recently acquired a body armor defense company out in New Hampshire for $3.5 million, right? $3.5 million. Initially, it was 10 million. And then we kind of talked him down to 3.5. And the reason we talked him down is because 2020, he had an anomaly year of 98 million in revenue. Now, when I say an anomaly year, it's because there was more COVID. And then when you go, when I do my due diligence, I'm very, very thorough when it comes to my due diligence. I look at, 5, 6, 7 years, 8 years, 10 years of, financials, profit and loss. I want monthly P&Ls and balance sheets so I can see that cash flow, kind of see, what months are great, which months are not, so that way I can project, how the cash flow is going to go and everything like that, or the payback months if I'm going to take some type of debt financing. So I try to look at all of that stuff, and then I get their accounts receivables, accounts payable, everything, right? So seeing that, I noticed that that year was an anomaly, and I went back, and it was a broker at the time. Right. And funny, I lied to you not, he fired his broker after we had this conversation, and he and I started dealing directly. I said, you're never going to get this company sold at 10 million, and here's why. And I pointed out all of that, and I said, this is why you're never going to sell it at 10 million. And I backed away for like months. And then he and I got back in connection, and he said, hey, I'll sell it to you at 5 million. I said, okay, 5 million is pretty good. I said, so what I'll do is this, because, it's kind of rolling into my strategy a little bit, and I'm sorry if I'm all over the place. But it's kind of rolling into my strategy as well. So my strategy is we look for controlling interest in a company. We also look at certain characteristics, right, when we look to acquire a company. And one of the things that I like to do is I like to have the owner of the company keep some type of equity. And the reason I do that is because it helps with any type of attrition that there may be. Yes. And it also keeps some goodwill intact as well. Because a lot of these companies, I acquire third, fourth generation companies. A lot of that is goodwill. Right. Yeah, so if the owners leave, some of that goodwill leaves, customers become families. So you want to try to keep them around. So I structure it in a way where, hey, listen, I want you to not only stay, but, benefit from the upside, because now you have somebody like me that's going to come in and grow the company and take it from X to here. Right. So I want to keep them on board and, keep them on for the ride, give them some cash, let them take some cash off the table, and then stay on, as an equity partner. But again, we have to have controlling interest. And there's a reason why I want controlling interest. So I started looking at the new financials again, and I got some year-to-date financials, and I built out a model, and I said, still not worth $5 million, man. I said, listen, we can do it $3.5 million. This is, where I want to be. And he agreed. And it was pretty easy for him to agree, because prior to 2020, he did like 1.something million in revenue, right? So you go from 1 point, I think it was like 1.2 million to 98 million in revenue. The guy took 30 million off the table in his pocket. He would, if had it not been for COVID, he probably would have never made that money in a million years. So it was an easy deal for him. Plus, his wife wanted him to, kind of go home and just be with the family. They made the money that they probably would have never made anyway. And then I kind of built my vision around what he's already built. I said, hey, listen, you're a defense company. I'm a minority. I can come in with my minority status, become MBE certified, and now we can take advantage of some of the contracts that you would never be able to take advantage of because you're not a minority. And then kind of building on, my strategy of how we can stabilize the company at 25 million, as opposed to just having it 1 year, going from 98 million to 30 million to 22 million, and then kind of trending downward. I want to stabilize it at 22 million and keep the profit margins where they are. And I showed him a plan of how to stabilize it and keep it where it was. So it was a no-brainer. So we finally, signed a deal last week, put pen to the paper, attorneys and everything like that. So that's really exciting. So I'm in that 60-day transition period right now. So we're working through that right now. So
I love it, man. This is, and obviously, I hope nothing that you're saying is going over the audience's head, because
I can slow down too.
You and I are just like, we're just talking, and it's like, oh damn, oh yeah, you're doing that. but I always try to remember that some people are hearing these type of things for the first time.
Right. Absolutely.
But what even your strategy on how you always try to have the seller retain some ownership, some equity in it. The reasons for it is exactly what I preach all the time.
Yes.
I do it every single time. I start off any conversation with a broker or seller, letting them know that is my typical investment strategy, because there's multiple reasons there. Especially since I'm always going to get some form of seller financing.
Exactly.
You know what I'm saying?
You want some seller financing as well.
Exactly. So if I'm gonna get some form of seller financing, you gotta trust that I can continue to grow the business, but I also gotta trust that everything you've been telling me, even though I'm doing my financial due diligence and all, is accurate. And now you got skin in the game. Plus, you could benefit even more as I grow it. So
absolutely. If someone tells me they want to sell 100% and they're not, the reason isn't because they're older, elderly, or sick, I get scared because I'm like, if this is such a great company, why would you not want to retain some equity and allow me to continue to grow it? So that right there is a red flag for me, and I get scared away, right? Another thing that I do, even in my strategy, and then I'll go to my roll up too. But another thing I even do in my strategy is I work with a company. I work with a bank called Webster Bank. It was formerly known as Sterling National Bank. My bankers came to my office one day, and we were sitting down and we're talking. They wanted to understand, a little bit more about, my strategy and what I was doing. When I told them my strategy and everything, they fell in love with it to the point where two of my bankers actually are my advisors as well. Right. So my bankers, they come to certain meetings with me sometimes. And, if my bankers tell me the deal isn't good, I don't move forward with the deal, because they're going to be the ones that even finance a good portion of the deal, right? I get my bankers involved early. I get my CPA involved early because it helps with my due diligence and everything like that. Now I obviously do the initial due diligence, but I let them come in early so that way we can kind of knock the deal off. Another thing, Beez, is what I do is I don't take any direct positions in any of the companies that I acquire.
There you go.
I either bring on CEOs, bring on CFOs, or retain their CEOs, or move somebody up that was a CEO in a different position in the company. I do not, and I'm just saying this to you and your audience, I don't care to be the CEO of any of my company.
You go.
If you don't want to, you can have the CEO title. I've hired and fired CEOs. It's a glorified job that I do not want. You can call me the janitor and I'll be happy with that title. I do not want to be the CEO of any of the companies that I own. I actually, I bring in people. Another thing that we do in our approach as well is we take a decentralized approach, which basically means that we're pretty much, when we bring on a team or we acquire a company, we allow that company to run independent of itself, right, and just continue to do what it does. And we're just pretty much just the support tank that they'll need if there's support or anything like that. And we allow, them to be a part of the decision making as well, because it's very important to have their input because they're the boots on the ground. Right. So we bring them into our decision making. We'll form a board around them and allow someone from at least one or two people from their management team to sit on a board that we create, comprised of myself and maybe a partner or two. So that's another thing that we do. And then we try to bring everything kind of in-house, from all of the accounting and the lawyers. Like, we try to use our own team, because I know that they have our best interests at heart. Right. So that's kind of how we do it.
Listen, I'm loving this, man. Now, first of all, same thing here. If people hear me say it all day long, I don't want to be the CEO of nothing.
No, sir. No, sir.
I want to be the investor. I'm working above the business.
Yes, sir.
I'll have the people in and even on the business, but then I'll just collect my revenue, my profit.
That's correct.
And I'll do it from multiple businesses. That's why we make a business out of acquiring other businesses.
Correct.
So 100%. Now listen though. So my approach in acquisitions is developing into your approach. And the reason why I didn't go there yet is because I was happy in the under $5 million acquisition. right? It's like a sweet spot. It's like, hey, this is the perfect sweet spot of they haven't done, and they've done enough to get to 7 figures, but they haven't done enough to really grow yet. And I could come in and easily increase profitability overall, etc. Now, when it comes to your approach, although we still doing LBOs, you need a lot more like investment bankers for funding, for financing the deal, that type of stuff. Right.
That's correct. Yep.
Explain that part of it, right? The financing, how you're raising so much money. Is that just really all your connections as opposed to any other aspect to get it done?
Gotcha. So I noticed that it's not easier to get funding, but I know the SBA only goes up to a certain amount of funding, right? When it comes to, financing these transactions. And I knew that, I wanted to build, a big portfolio pretty fast and utilize, some of these big companies that have, a ton of relationships and things like that. So what I noticed was private equity firms, they have a floor in terms of companies that they look for, and they like to be in the lower middle market space. So I modeled my I guess thesis behind what they like. So I look for companies that have a base of 10 million in revenue, 2 million in EBITDA. So if I find a company that has 10 million revenue, at least 2 million in EBITDA, I know it's pretty much easily financeable through a private equity firm. And I can go to any private equity firm and present a deal to them. So that was my reason behind going that route. And, I know that if I bring a company that's either 10 million, 50 million, 80 million, I can still go to the same circle of people that I normally go to in the private equity sector, as long as that EBITDA is there and I can get a multiple on that EBITDA, right? Sometimes. So normally some private equity firms, depending on, they can probably do like 3 turns on EBITDA, 4 turns on EBITDA, right? Which means that, and when I say 3 or 4 terms, that means that they'll give you 3 or 4 times what that EBITDA is in a check size. So I know that, I can get really creative with seller financing, or, how much skin in the game that I'll actually have to put in, or is there something that I could, use to finance it. So what I do is I look at how this cap table would look, right? So how what type of, financing, how's that financing going to look, right? From senior financing, which will probably come from my bank, that's more conservative, that'll do 1 to 1.5 times the EBITDA, and then I'll bring in something in the subordinate space, or mezzanine space, which will come in to be like my private equity people, right? And I know that they'll do 3 to 3.5, maybe 4 times, depending on how aggressive they want to be, right? And then where I come into how much capital outlay that I would have to come in to kind of bridge that gap and make it work, right? Or if I have to go back to the seller and say, hey, listen, here's a financing that we can get, take this much off the table. In exchange for that, take a little more equity so that we can still make the deal work, right? And frame the deal out. So that's kind of how, we'll go about doing it. So working with private equity firms, believe it or not, they like working with, sponsors, like, or independent sponsors, if that's what they call it, like us, right? I don't really consider myself an independent sponsor because I do put cash in the deals that I do. So I'm still a sponsor. But they love working with people like us because one of the issues with private equity firms is deal flow, right? So they want to see that deal flow as well. So if you can bring deal flow, and they can, private equity firms, what they hate to do is they hate to have a ton of dry powder. And dry powder is the, cash that's not invested. They don't want to have that. They don't want to have too much dry powder just sitting and not working, right? So if we bring deals to them in their range, right, and there's not a lot of one of the things with private equity firms, I will tell you, is the due diligence on your side and their side is you can piggyback off of their due diligence, but you have to do a lot more. Like you have to get they require you to have a Q or V, a quality of earnings, right, from a reputable auditor or accounting firm to do their quality of earnings. So you figure, depending on who you go at, quality of earnings can run you anywhere from 30 to 50,000. Now you can either pay that cost yourself, or you can pass that bill on to the seller if they know for a fact that they're going to sell. But you can also tell them, hey, listen, you should get this anyway, so that way it can kind of solidify the numbers that you're giving. right?
Yeah.
So that way people can't argue with your numbers at that point because you have a reputable accounting firm or auditor auditing your books. So, normally it's not hard to pass that cost on to them, right? So
Yeah.
that's kind of how I do it with our private equity firms. But again, their due diligence is a little more, intense, but you can piggyback off of their due diligence because they'll even open your eyes as to why you shouldn't, what to look for, what questions to ask that you probably didn't think of asking that may not be on, your sheet or your initial punch list. So I learned a lot doing that as well. I did want to do a private equity firm, but that was just a whole totally different story as to why I decided to go against that route, right? But again, you kind of piggyback off of their due diligence, and it really helps out, right? So I would tell anybody that's looking to get into the space of bigger acquisitions and that 10 million plus, it's friendly, right? Because it's a lower middle market. They love to play in that space. Your bank, whoever you bank with, they have a lower middle market division that you probably weren't even aware of that will even take your hand and walk you through, their way of doing it for the lower middle market, right? The only thing you got to watch out for, and I don't want to harp on this too much longer, but the only thing you got to watch out for is when you go this route with private equity firms, they have you want to make sure it's in a space that they don't have a lot of concentration in. So, for example, if they have a portfolio and that portfolio consists of 8 car washes, don't bring another car wash in there because there'll probably be too much concentration in that, and they'll turn you away just for that specific reason because they have too much concentration in that one area.
True that. That's a very, very good tip, actually. And I tell people that at every phase of this, you're going to have a slightly different approach, slightly different speaking to, slightly different type of financing, everything. Because I would assume you probably haven't really dealt much with family offices yet. But when you start doing $100 million acquisitions, then you start going to the family offices.
Correct.
Right now, the middle market, the private equity firms are perfect for those.
They're perfect.
So yeah, and then below that, when you get the 5 million and under acquisitions that I was doing, I don't really have to go to anybody sometimes.
No.
So sometimes I'll just I may go to like some investor friends and say, hey, you want in on this one or that type of stuff. But the strategies, the way that you get it funded, although it's the same kind of concept with the structure, it's just where you're getting it from might differ.
Correct.
So I love that, man. So I first of all, I mean, I don't want us to start geeking out too much because we could go deep in. And we didn't even talk about we you know what? It's time to go pop. Let's go. The whole AUM, the whole creating $100 million portfolio. We need to talk about the pros, the opportunities, and the problems. So what would you say are it's kind of obvious, but what are the pros of creating $100 million AUM portfolio?
One, the pros is you're able to create this this portfolio of if you go to diversify route, you have this diversified portfolio of companies that can weather any economic storm, right? And it doesn't really hurt you because if one sector does bad, you have all of these other different sectors that can kind of balance out your portfolio, right? Another pro is it's a little bit easier to raise more capital. People will take you more seriously now because you kind of reached that $100 million threshold. You're not a big fish, but you're not a small fish, right? You're somebody that they can actually have a serious conversation with in terms of how your portfolio is growing, right? So those are some of the pros. Also, you get to hire some really great people. You get to rub elbows with some really some people that have even bigger because the truth of the matter is $100 million portfolio, $1 billion portfolio, you're in the same circle of all of those people, right? So you're talking to the same people. So those are some of the pros of having a portfolio of that size, or growing to a portfolio of that size, which I really like.
So and then what would you say are some of the opportunities that are coming up as to why people should start thinking like this? Because AUM is a different concept, right? A lot of times when I tell people that I'm on my track right now is trying to get to $1 billion AUM, They're like, you trying to make $1 billion? I was like,
No.
well, I am, but that's not what that means.
That's not what that means, right?
Like, there's a difference. So what would you say are some of the opportunities that's coming as to why having this focus on AUM and trying to create a large portfolio like that? What are the opportunities that we should take advantage of?
Yeah, so some of the opportunities again is, one, having that diversified portfolio, which is extremely important. Two, there's a lot of opportunities out there right now because we're coming to a quote unquote recession. So there's a lot of companies right now that are really perfect to even grow to this 100 million or to grow your AUM even faster and kind of have it stabilized and protected. One perfect example, and I would like to dive in this a little bit later if we have time, is the food distribution space, which I'm really focused on right now. I'm doing a roll up right now, and this is the opportune time to do that. The reason it's the opportune time to do that is because, one, food costs are rising. Food distribution companies do very, very well in phases like this. On top of that, they also do extremely well in inflationary periods. So they're recession proof and they do well in inflationary periods. Case in point, how much is eggs right now? Eggs are probably like $5-6, right?
Yes. I wouldn't call them recession proof. I call them recession profitable.
Recession profitable. You know what? I like that. There you go. Right? Recession profitable, right? So, and those are some of the opportunities that you have right now and to go towards building out your portfolio. There's going to be a ton of deals right now. So if anybody's even thinking about getting into the space, right now is the perfect time to do it, but kind of keep your focus on things that are like Beez said, recession profitable, right? That'll make you, a lot of money during this time. Yeah. Now, I know we're about to run into the big part right now.
My favorite part.
What are some of the problems that you run into? Oh my goodness. Listen, some of the problems that I'm even experiencing right now is, regardless of what stage you're at, you're going to have people that truly don't believe in what you're doing. They're going to try to knock you off of what you're doing. They're going to tell you what you're doing is wrong. Managing, having one of the most important things that you'll have is, having your systems and operations and procedures in place, your SOPs in place, because if you don't, when you're acquiring all of these different companies, you're acquiring a ton of different personalities and structures and people that they've done it their way for so long. So coming and trying to implement your strategy into these places sometimes causes problems, right? That you get some resistance at the top and on the employee level, right? Because you're coming to, not really change the way you're doing it, but enhance the way that they've been doing things, to kind of put forth your vision, right? So those are some of the problems and challenges that you'll run into. Other problems is, even though that there are finance partners out there and banks out there and, things like that, there are still companies that, they may just look at you and say, this may not work, or you're not the right person, or why are you doing this, right? So those are some of the problems that that I even still face today, right? And some challenges that I have, but with every problem is, again, there's an opportunity, right? And there's a way to show people that, listen, it may be a problem to you, to me, I can find a solution and do it better. So that's kind of some of the problems that I face. But listen, it's not easy building up to even 10 million in AUM, 5 million in AUM. Every step, there's going to be some challenges. It's definitely not easy, but I implore anybody to just stay the course, man. It's worth it. It is worth it.
And perfect example, Reginald Lewis's first 2 major attempts. Failed miserably. Remember, he was on that one for like a year and a half courting them, and then at closing is when that's when they all fell. Yeah. So he still became a billionaire.
Right.
There we go.
So why did I name myself Young Reginald Lewis?
And that was going to be my next question. Let's go.
Why did I name myself Young Reginald Lewis? It's very simple, right? You as a kid, you always want, that role model or that superhero to look up to. And coming from where you and I came from, Beez, there's not a lot of superheroes that look like us, right? So there's not a lot of, and that's why I applaud you for what you're doing, because people need to see more people of color in this space. And I understood why Reginald Lewis wrote the book, Why Should White Guys Have All the Fun? Because this space right here, there's only two spaces that really make the world go round, and that's banking and insurance. Those are the two top giants, banking and insurance. Everything revolves around banking and insurance, right? So getting into this space and coming from Wall Street and understanding, where all of the money is made, and then understanding that you can go from 0 to 100 million in just a few acquisitions, or maybe even one acquisition if you do it right, right? The Nabisco acquisition, for example, $1 billion, acquisition. So I came after Reginald Lewis because it was somebody that looked like me, that understood that, this is a game, and he understood how to play the game. And he died at such a young age from brain cancer, which I even invested in a brain cancer company called Novax. It's a publicly traded company run by a Black doctor, Dr. Dwayne Irvin, out in California, who's a good friend of mine. So, his legacy couldn't just die and stop there. He had daughters, but again, that representation, I wanted to be that representation of what he could have still accomplished. And that's why I'm striving to accomplish what he's accomplished. So, the name young Reginald Lewis means a lot to me, because not only do I have that role model of somebody that looks like me, that's been there and done it, he paved the road for you and I, right? To continue to go on that trajectory and on that path. So that's why I picked that name. I could have picked any other name, and I said, you know what? I could have picked young Donald Trump, right? But it wouldn't have been a good representation of me and my people. Young Reginald Lewis is a better representation of myself, that don't give a crap attitude, that go getter, and not allowing anything to stop us to get to where we're trying to go.
100%, man. And I believe that to be the highest honor, even being mentioned in his realm, because you're already you're on that same path, bro.
I'm on the path, man.
Yes. And that is amazing. And I know when we were speaking before, you said that, you've always kind of been, quiet on social media and whatnot. But like you said, people need to see more superheroes that look like
they do, bro. They do, man. So, I agree with you 100%, man. That's why, like I said, I applaud what you've been doing, man.
Thank you,
I follow you. You got my support 110%, man, because you're exposing people to something that I wish I was exposed to earlier.
Me too. Me too. That's the reason why I'm doing it. Had we known this you started earlier than me, to be honest. But had I known this when I was 17 or so, man.
Listen,
my son is 18, right? And he just started college, and he was like, Dad, I found a spot that a sushi restaurant, and you think we could acquire it, blah blah blah. I found that it's for sale. And I was like, I don't really like restaurants that much, but if you're interested in, getting the responsibility of managing it, and I'll help you through what it takes to acquire and then to be an owner, etc. And, his perspective was, well, girls love sushi, so this is great. But I was like, that's not the right reason to get into this, but it's still a powerful conversation that I'm having as a Black man with my Black son, 18-year-old son, to be talking about, oh yeah, can we go acquire that one? You know what I'm saying? Like that's powerful.
It is powerful, man. Like I said, we need more of us, in this space. Another thing too that I realized, and even growing into this, where I'm trying to go is it's also key to, even if you don't want to start a private equity firm, kind of run it like it. So I have we have GPC Holdings, which is, kind of like my holdings company. And then I have GPC Investments, which is my investing arm that I, make the investments through. And then I have GPC Management, which kind of manages, everything, right? So that's kind of the three layers that we have, right? The holdings company, investment company, and the management company. And kind of keeps everything, pretty good, right? So everybody has a role. Manager manages everything. Investment company invests everywhere. And the holdings company just holds all of the assets, right? So, it's kind of how we did it and how we're doing it, right? And last thing, if it's okay, again, to get to that 100 million in AUM, we're doing a full distribution roll-up right now. One of the companies that we're acquiring is a 90-year-old company out in New York that's doing about 80 million in revenue right now. There's another one out in Florida that's doing about 18 million in revenue. and then there's one in where's the other one at? You got New York, Florida. Oh gosh, where's the other one at? Oh, Georgia, that's doing about 28 million in revenue. So the reason I'm acquiring all of these companies, right, is you can create what's called in the same, so I'm doing a roll-up strategy. Yeah, in the same space, I can create that. So we call it, it's called economies of scale, right? Mm-hmm. So we create economies of scale. We can also share the distribution channels throughout all of the companies that we're looking to acquire, right? So we can easily break into those markets, introduce those products from the other two into this market and vice versa, right? So that's kind of what we're doing. So my bankers were like, not only are you going into something that, that does well in inflationary periods, recession, but now you can create this economies of scale. And we also are bringing in some proprietary inventory technology management that they don't have currently. Believe it or not, man, when you acquire these, just a little tip, when you acquire these companies that's been around for like third, fourth generation companies, but they still do stuff with pen and paper, right? Inventory management still pen and paper, man. I was surprised. I'm like, wait, you guys are still using pen and paper? Right. So that in itself, we can create, we can probably increase margins and create increase profitability because we can account for some of the loss that they have. Right.
So most of those companies that, especially when you're dealing with, like you said, those third generation level companies and such, they I mean, we talk about as young entrepreneurs, young business people, we know about funnels.
Absolutely.
We know about social media. We know about a variety of things that we just take for granted as, oh yeah, you should do that, but they're not being done in so many
other
not
being done, man. They are not
being done.
Those are quick turnarounds, right? Yeah, those are quick things right there, man. Then you bring, you bring technology in the mix, and it just makes things even better. So so that that's kind of what we're doing, man. That's kind of our strategy and where we're kind of going. It's working so far. My goal is to be at that 100 million AUM, Q2, Q3 of this year, which we're gonna hit, guaranteed gonna hit that, man, and we're just gonna keep going from there, man.
So listen, because of this conversation,
sure.
What I started doing recently, well, not because of this conversation, but what I started doing recently is anytime I get a guest on the show, I'm actually giving them deals. I'm giving them, because there's so many, right?
There's a lot of deals.
My deal board is insane.
Okay.
So I'll find things for people and I'll say, okay, well, I know that you're in the automotive business. Here's an automotive thing in your city that I found, blah, blah, blah. Here, you go ahead and handle it on your own, right?
Love it.
Now, I couldn't think of anything for you at the time because I was like, well, Shaheed already doing his thing, so I don't need to give him one. But as we were talking, I have one for you. It's one that I'm going after. It's a $20 million top line revenue, 2 million EBITDA, approximately 2 million EBITDA, just like you were mentioning. And I'm like, okay, Shaheed and I need to go in on that.
Okay, I like it.
We'll talk offline about what
tell me more, man. Tell me more. Tell me more.
Yeah, it's a really this opportunity is really good too. You're gonna like
really? Oh yeah, man. Listen, help me get to that 100 million even faster, man. Come on.
You know what I mean? And it's not in your realm with the roll up, what you're doing with the food stuff, but this is another great one. A lot of growth opportunity, numbers look good. So yeah, and there's certain things that we could do when you have. That's another strategy that I started focusing on more. Right, when you have a certain level of top line revenue, you have access to so much more capital. Right,
you do.
So most people think, oh yeah, but it's 20 million in revenue, but it's only, it's less than 2 million in profit. So you're probably not going to get that much funding. Banks don't look at how much money you keep. Banks look at how much money you're running through the bank.
Correct.
So they're looking at that top line revenue, and now you could utilize that to go get tons of funding to help acquire other businesses related to that one and continue growing and growing and growing.
Very, very easily. Absolutely. Very easily. Yes, right. I'm excited to hear about that deal that you have.
Oh yeah. I'll probably, well, no, it probably won't be right after this call because I got another meeting I got to get to. But
no worries.
But maybe by tonight, I'm gonna send you a message. We're gonna start talking.
Listen, man, I'm up to sometimes 2-3 o'clock in the morning, man. So feel free to call me and text anytime, bro.
Let's go. So I'll say this too. Since we close to the end, there's so much more you and I could talk about for sure.
Oh man, yes.
But we'll save that for part 2 of this, because there will be a part 2.
I need it to be, man. Absolutely.
Now, I don't have to ask you this question, and you might actually get there before me. But I ask everybody that comes on here, listen, I have something called a $1 trillion table challenge. The $1 trillion table challenge, by the end of this decade, that's 7 more years to go, I want to sit in a room at a table with people who look like us, and we have combined $1 trillion AUM.
Listen, let's do it, bro. You heard
it.
Wait, you heard of the $1 billion roundtable, right?
Yeah, I've heard of it, and I'm surpassing that.
All right, so we're doing a $1 trillion roundtable.
$1 trillion roundtable.
I love it. I'm going to be a part of it, man. We're going to be there together. Trust me.
I love it, man. And we're in the path. We're in the realm of where it can be achievable, because through business acquisitions, I see myself getting to $1 billion AUM within this decade for sure.
Absolutely.
Right. So if I could get there and multiple people could get there, it ain't too far-fetched for us to say that, yes, we can sit at a table with a bunch of us that have $1 trillion AUM.
In AUM. Absolutely. I agree with you 100%. You know, I'm on that same road with you, man. We're going to do it.
Yes, sir. So usually I tell people this, and I ask the question, will you be at that table? But I don't need to ask you, because I know
I am going to be at that table 1,000%. I am going to be at that table.
Here first, y'all.
I am going to be at that table.
Shaheed helping to build the table. He's the one with the legs on it and everything.
I'm underneath it, building it right now, man. Trust me. You know, getting the legs together, making them strong.
Let's get it, my brother, for sure. So, Shaheed, tell the people where they can reach you, get in touch with you, learn more about you, anything like that.
So, you can reach me on Instagram. That's the handle, Young Reginald Lewis. LinkedIn, Shaheed Bailey. Facebook, Shaheed Bailey. Those are some of the easier places to reach me. I respond faster on LinkedIn. I'm always on LinkedIn. Instagram, you may see a little bit. Beez got my wheels turned. I need to start being more active on Instagram. So you guys are gonna see me more active on Instagram. But LinkedIn, Shaheed Bailey, IG, Young Reginald Lewis, and Facebook, Shaheed Bailey.
Shaheed, can I get you on record right now? I need you to come speak to my community also. I know you came in and listened in before, but you gotta come tell this message in there as well.
Tell me when, man. You tell me when I'm there, man. Like I said, I couldn't miss this for anything, bro. So Beez, you're probably one of the few people that I say this to, man. You call, I'm there, bro. I'm there.
Brother. I appreciate you, man. And the feeling is mutual. Anything you need, I got you. Let's get it, man. Let's build. Let's show the community. Let's show everybody what we can do and what they can do too. They see what's possible. All right.
I'm excited, man. Thanks so much for having me.
Same here, my brother. It's a pleasure speaking to you. Listen, everybody out. You just witnessed us exposing what it takes to create a $100 million AUM portfolio. Shaheed just laid it all out for you, right? And this is just the beginning of it. We got so much more to talk about. This is a taste. Wait till you see what happens in part 2. And the only way you're going to see what happens in part 2 is if you're subscribed to this channel, you're subscribed on the podcast, you like and turn on the notification bell and all of that so that you don't miss a single episode, and especially don't miss part 2 of this discussion with Shaheed Bailey, aka Young Reginald Lewis. Let's go. All right. So this has been Entrepreneurship Exposed with your guy Beez and our guest Shaheed Bailey. I will see y'all on the next episode.